Welcome back to Cheryl Trades LEAPS. You were right about the stock. It went up. And you still lost money. That's not bad luck. That's a broken process. Today I'm going to show you exactly what that broken process looks like, and the simple framework that fixes it for good. Section 1. The real problem. Most traders don't fail because they're dumb. They fail because they're busy. Too many indicators. Too many setups. Too many trades. And all that noise creates one thing: hesitation. You miss the entry. You chase late. You're already emotional before the trade even starts. That's not a knowledge problem. That's an execution problem. And execution only gets fixed one way: by simplifying. Section 2. The shift. I stopped asking, "What's the best strategy?" and started asking, "Why am I not consistent?" The answer was always the same: too much noise. So I stripped everything down to 4 things: price, levels, market direction, and volatility. That's the whole game. Section 3. The LEAPS framework. Here's the framework. 5 steps, in order, and the order matters. Step 1. Market direction, first. Before you look at a single stock, look at the market. S&P 500, Nasdaq 100. Is it trending, or is it chopping around? If it's choppy, you size down or you sit out. If it's trending, that's when LEAPS are built to perform. This is your filter. Everything else comes after. Step 2. Location over opinion. Here's where most people lose before the trade even starts. They buy because they like the stock. You don't buy because you like it. You buy because of where it is. Look for 50 EMA pullbacks, strong support zones, prior breakout retests. That's your A+ entry zone. Not a good stock at a random price. A great setup at the right price. Step 3. Wait for confirmation. This step is what separates traders who survive from traders who blow up. Most people buy the second price touches support. You don't. You wait. Is price holding? Are buyers stepping in? Is there a real bounce? You are not predicting the bottom. You are reacting to strength. That one shift alone, reacting instead of predicting, will save you more money than any indicator ever will. Step 4. IV rank, your hidden edge. Now here's the step that most traders skip entirely, and it's the one that explains why you can be right about direction and still lose money. If implied volatility is high when you buy your LEAP, you are overpaying. The stock moves in your favor, but the IV collapses and your option barely moves or goes down. Your rule is simple. IV rank under 30, you're in good shape. IV rank above 60, be very careful. Same stock, same move. One trade wins, one doesn't. That's the volatility trap. Now you know how to avoid it. Step 5. Risk management. This is where accounts are saved or destroyed. I saved this for last because it's the most important, and it's the one nobody wants to talk about. It's not the setup that destroys traders. It's what they do when they're wrong. Here's how to handle it. Don't go all in on the first entry, ever. Start with a partial position. Add only if the trade proves itself. And this is critical. If your level fails, your thesis is wrong. Not, wait a little longer. Not, maybe it comes back. Wrong. The market just told you something. Listen to it. Cut the position. Protect the account. Live to trade another day. The traders who last are not the ones who had the best setups. They're the ones who survived the bad ones. Bonus. Taking profits. One more thing, because you already know this, and it's an edge most traders waste. You don't hold LEAPS blindly into earnings. You trim into strength. You lock gains when momentum is high. You sell before the event, not after. LEAPS can give you a 50% gain in a week and take it all back just as fast. Don't let a winner become a lesson. Section 4. The hardest truth. Most money in trading is made waiting for the right level, waiting for the right conditions, waiting for confirmation, not forcing trades, not chasing moves, just waiting. The market rewards patience far more than activity. After all the strategies, all the charts, all the trades, here's what actually works: simplicity, discipline, repetition. The traders who win are not doing more, they are doing less, and doing it better. I don't trade the news, I trade the reaction. And with LEAPS, you don't get paid for being early, you get paid for being right at the right time. Thank you for watching, and see you in the next video.